G'day expats and welcome to another episode of Expat Chat, episode 108. Gosh, we're getting up there. We're fast climbing as we wind out the end of the year, which is fast approaching. I'm joined always with my friend, mate, business partner, colleague, all the above, Brett Evans, who is the Managing Director for the EMEA region, or as I like to call it, the Sandpit. G'day, Brett. How you doing over there?
All good here. It was 16 degrees on the way to work this morning, so
Ooh,
nice and crispy. I'm liking it. Best time of year.
yeah, that's
People
fresh.
say people say what's a Dubai winter like, and that's the best way to describe it. It's like a Gold Coast winter. You know, you have cool
Ooh.
nights and moderate mornings. And if you can't see my back, James, when you're here in January 2020, sitting out there at the bushfire fundraiser in jeans and a t-shirt, you froze your backside off. So
Oh, well, no one informed me that it was going to be 14 degrees down on the beach. I did not pack for 14 degrees.
yeah, yeah.
It was a rude shock, actually. It really was.
So now coming to the best time of year, mate. This place is magic this time of year. It's there's something about having a Christmas period when you're wearing a jumper and not sweating your backside off over a barbecue. So I do love it. To the folks on the call today, joined by my mate, colleague, business partner, and the guru of the APAC region, Mr. James Ridley, who runs the Australian office and pretty much has written the book when it comes to especially clients in the US. You know, some of his strategies you will not find anywhere else. And I say that in a humble way, because I see the work he does, and it's pretty bloody awesome. Our clients in the US are very lucky to be working with him. So, and obviously the wider team as well too, mate. What are we going to talk about today?
Well, I mean, we're getting close to it almost being a new year. So I thought, why don't we do a bit of a general episode today and wrap up the 12 months that we've just had, essentially. It's been a wild ride this year, and I feel like every year it's a wild ride. But I mean, I want to reflect a little bit on just the data and how we entered this year and where we've been and maybe where we're going into 2024. I think that's a great way to put it.
And it is, and I think no presentation by us would be succinct enough unless there was a nice little healthy disclaimer in there. All the information that we are going to have a good chat with you good folks today should be treated as informational and educational purposes only. Please do not treat this as personal advice. If you do need to get personal advice, speak with a specialist, speak with Atlas.
That's right, mate. And I mean, what a year we've had. The last 12
Oh,
months,
yeah.
it's just been so much going on. I think, if we look at Australia's economy, it's carried on. It's slowed down a little, but all in all, it's been able to weather so far a lot of those interest rate decisions. The property market hasn't really done much. Sidestepped a little bit, some capital growth in some areas, remarkably, but it is slowing down, which we are seeing. And then even looking, some data that's only just come out, unemployment rate still under 4%, but we did just get that recent little increase, which is normal when an economy is slowing down. GDP was only 0.2 for that quarter as well, September quarter. So that's a pretty small quarter, and that's a representation of our economy slowing down, which, to our listeners, that's actually quite normal when interest rates go up. That's the whole point, because it's meant to drive down the demand side, help us bring down inflation or bring inflation to heel, which is happening a little bit slower than probably what we'd like compared to the US economy. But all in all, heading in a really good direction so far for what could be actually a really nice 2024 compared to a slow 2023.
I think that's the key point that everyone can take away from this year. And at the moment, as we talk live on the market right now, up 1.60% on the ASX 200. So cracking day today, and certainly that Christmas rally is here with a vengeance. I think the best way to describe investors in the stock exchange is like a 2-year-old child. They don't like to be surprised. They like to be fed lollies, cuddled, and put away into bed, tucked under a nice blanket. When they are surprised, that's when it creates that sort of doubt. The sentiment reduces, and where we are right now, if you cast mind back to this time last year, we were just in that sort of early phase of that rampant interest rate cycle, and it's the fastest rise in interest rates in modern history, what we've just gone through. So there's always that the market can look forward and try and hypothesize how it's going to happen. But
That's right.
what is it going to do to the consumer? What is it going to do to the companies? Now we sort of, as we're coming to the end of this cycle, the market's got the benefit of hindsight and saying, well, guess what? Economies didn't fall over, soft landings on the cards, and companies are still, for all intents and purposes, operating fully employed. So obviously there's different sectors that are doing different things like construction and tech, maybe not so, but other areas they're flat out. So, I think we've weathered the storm. That's why obviously the market's rallying and has been rallying for the better part of the last month, because we know that the end is in sight. Now, data can be construed either way. There's a lot of talk in Australia about a per capita recession, which explain to folks out there's so many new migrants coming in that when you look at productivity from a GDP point of view, from a general capacity of everyone's ability to create a job and spend money and make all the money go around, they're saying that the large cohort of migrants coming through has skewed the numbers. If you take them out, in actual fact, the economy hasn't gone as good as it appears in the numbers. And like I said to a client the other day, I said, well, look, the government's policy is this is not going to stop. So it is the norm. If it was just a one-off, it's a black swan, then strip out the numbers and stuff. But next year, I don't think they're going to do 600. They're looking at doing 300 or something thousand new migrants to Australia. So to me, the numbers are still relevant, because even though that it is skewing the numbers, they're there. They're Australian residents. They're living there permanently. Their capacity, their personal exertion. So, exactly. Absolutely. So I don't think this. And the press love to talk about hard landings and global recessions and stuff. And to me, I don't think it's a causal event to be worried about, as an investor. Certainly, are we in a bull market and our ears are pinned back and we're going for broke? No, we're not. But I don't think the world is coming to an end tomorrow. Certainly, there's a lot of geopolitical events going on. The one up the road from us, Israel, Palestine, and I was just talking off the air before about the Houthis in Yemen attacking the boats going through the straits there as they headed their way up to the Suez Canal and stuff like that. But as long as there's no contagion effect. At the moment, it's sad to say that the Israel-Palestine conflict doesn't have an economic bearing on the rest of the world, which is why the markets sort of brush it aside, in saying that if it does extend out to the wider Middle East region, 1/5 of the world's oil supply goes past our front door over here on the way going through the Straits of Hormuz, on the way from Saudi and Kuwait out to the Indian Ocean. So then we're talking issues. But I noticed yesterday the US government's asked the Australians for one of their Navy warships to come over here, and they're obviously going to set up some sort of flotilla of vessels to provide cover for
bolster.
So,
that's right.
I mean, if the Houthis are willing to take on the US and Australia and everyone else, good luck to that, because we know how that ends. We had those attacks here back in 2022 from the Houthis in the UAE, and where they were launching the explosive drones that attacked us here, apparently just leveled the mountain. Like, they actually changed the topography of the mountain.
That's right.
So that much ordnance. Out of my backyard, there's a Munad Air Base, and I was watching a plane take off every 2 minutes, just laden with all the gear they need. So if the Houthis want to play that game, then I think they'll be met with a very stern response.
That's right. And I mean, turning it away from, those potential geopolitical risks, which, they'll exist into the new year and probably for the next, I'd say, couple of years, they carry on. It's going to be a big year in the US. We could have a new president. We've got the US elections on the horizon. Trump could get up, Biden could get up. It's going to be interesting. And that's always going to cause, a mix of volatility, because, as Brett was talking about before, share markets and the ideal investor loves certainty. Uncertainty breeds a bit of volatility. That means we might see a bit of risk off. But the way we're tracking at the moment, there's plenty of reasons for optimism. You've got inflation is curbing down in the right direction, a really strong theme now in most developed economies, which is great to see. I think in the recent US Federal Reserve minutes, the dot plots, they're all pointing to some sort of rate cut next year in the US, and I guess hard to sort of know when. But even I guess, the dovish tones in Jerome Powell's speech as well. So we know that's coming off a little bit because naturally inflation's coming off. So I think that'll be quite exciting. I want to know what's going to happen next year with China, to be honest.
That is the big
China's
one.
obviously, it is. And Australia needs China, major export partner. In the last 2 to 3 years, ever since ScoMo, Scotty from marketing, he sort of obviously put a big dampener on that relationship, which hurt our exports. Only recently we've seen Albanese repair some of that relationship, and it's definitely opened up a lot more exports to China, which is exciting. I think the last things on the to-do are, I think, not wine, but I think red meat and maybe even seafood as well, which is a massive industry in Australia. So be very interested in seeing how that all tracks. But that actually all votes well for China if China's doing well. If they're, I guess, big engine is at full steam, that's great for us. But is it going to be because of their property market and how everything's going over there with their debt market? That's always going to be a question market. They can't just keep building. They can't,
No,
in terms of the way the Ponzi scheme can work.
interesting. I heard an interesting analogy the other day, which, while I don't agree with, the similarities are quite frightening. So they're saying, wonder whether China will be the new Japan. And I was like, what do you mean by that? And Japan went through meteoric economic growth back in the 80s, bought everything domestically, internationally, massive property development, massive everything else. And then their economy stalled and it wasn't able to maintain that growth, maintain the debt. And that's when the Japanese economy fell into a mess. So those people who are the real bears of the China story are trying to draw links to that. While I don't agree exactly with the links, it is a concern if they can't do something. Where I think it's different, though, is in China, there's 356 banks, all owned by the Chinese government. So if they want, and they're not talking branches, I'm talking banks. So if they want minions to be able to, flex economic muscle, capital, fix it, they have that ability to be able to turn those taps on instantaneously and control that. The RBA, when they make a decision on interest rates, the Australian banks don't have to follow suit. They don't have, and there's times they ignore the RBA. Whereas in China, they have to follow. so if the Chinese central bank wants something to happen, they make it happen. The big thing is, to me, it's the punter. Can they get the punter engaged? You've got, was it unemployment under the age of 25 or 22%?
Oh, it's shocking. Yeah, it's shocking. I mean, what's going on there?
So that's the big one for me is it's not what Beijing wants. It's what the punter wants. And how do you install confidence in them and faith, and especially on the back of going through COVID and how China handled, the pandemic. I think it crushed a lot of optimism, and it's going to take some time for that to pick up speed again.
Yeah, that's right. And I mean, I guess when we think about forecasting for 2024, we know that inflation will continue to ease. The rates are having that kind of impact as a whole when we look at everything going on around the world. I think it's setting up for, I guess, a much better 2024 calendar year versus 2023, calendar year. You look at the Australian share market has sidestepped a lot this year. It's only probably recently we're starting to see a bit of life. And again, it's all going back to that whole argument that the share market loves certainty, and our pathway forward for the next 6 to 12 months is much more certain compared to how we entered 2023. And share markets are forward pricing. So that's also what's factoring in there. I think the Australian dollar, that's been an interesting one to watch, isn't it? I mean, you look at how it's changed and
interest
I guess
rates.
Appreciated. Interest rates, yeah, you're right. I mean,
All that interest rates.
Do you reckon right now they're pricing in the US will cut before Australia, and that's why you've seen the Australian dollar appreciate against the US dollar?
100%. To me, the Australian, from a monetary policy, is about 6 months behind the US. So when the US stops raising rates, fast forward 6 months, that's approximately about when Australia will follow suit, and vice versa on the rate cut side. So 100% they're factoring in that there's going to be an interest rate arbitrage between the two. and
100%.
people are sort of taking that position now. The big question is I think deep down they're still relying on Michelle and the RBA to raise one more rate rise in February, which is when they next meet. That's
Yeah.
the question is, what data do we see from Christmas? If that Christmas data's flat to down, there won't be any rate rises in February. And if that's the case, then I think you'd see the Australian dollar come back.
Yeah. I think, but I mean, I reckon based on that, the gap between our policy rates and that 6-month lag, we could even see 70 cents again towards the end of next year, maybe. I mean, it makes sense, and that's just logic. That's economics 101, so that'll be interesting. I guess Australian shares, I think they'll have a stellar 2024. I'm wondering whether they'll outperform the US share market because you've seen some strong growth in some isolated sectors within the US share market. A lot of it was briefly in tech because of AI, and our PE ratios on the Australian share market look a lot more attractive compared to the US market. I think it's going to be interesting to see which share market actually outperforms next year.
Look, I think the US has always got the chalice, the trophy when it comes to, if the market does well, it's the US kills it. But also on the other side, like we preach with clients all the time, diversification's key. So do I think the Australian market would outperform the US? The only time I'd say that would happen would be a resource boom. If iron ore went through the roof and everything kicked off, then that would be the case. But I just don't see it because, as we said before, China's misfiring. So
that's right. Yeah.
To me, Australian, if you look at the S&P 500, of the top 10, 6 are tech. So the S&P 500 essentially is tech. It's a quasi Nasdaq. So if tech's doing well, 100% the US will outperform Australia. If tech's not doing well, then that's when Australia can perform.
Yeah, absolutely. And I wonder if we'll see any big legislative changes next year. I mean, the one that's front of mind for us and our clients and obviously our listeners would be residency, tax residency.
And as I'm talking to you right now, live when we're recording anyway, I'm just checking the website that Treasury used to gain the submissions and where they should be lodging the submissions. And they have not lodged anyone's submissions in terms of disclosing it to the market. So I'd say there's a lot in their in tray right now they're still getting through. The other thing I actually wanted to address too, which this is live perspective from the call, obviously everything's relative, but we finally got a response to our petition that we lodged last year. So thanks for finally coming to the party there, federal government, but they've come back and finally given us a response. They talked about some nonsense about, we had a problem with our computer system, so the minister didn't receive your petition. And when we had over 1,000 signatures, so and, like I said to someone the other day, the conspiracy theorist in me essentially drew the conclusion that they knew that they were going to make a change anyway. So to try and nullify the petition, we'll wait for after doing the consultation papers, then respond. Say, oh no, we're definitely on board with everyone. And so if I've got a spare 10 minutes, I'll try and get this reply up onto our website and share on the social media. But
even a screenshot.
Paraphrase it. Thank you for your correspondence. So this is from Stephen Jones, the Assistant Treasurer. As you know, the former government announced in 2021 that replaced the tax rules. The government publicly consulted for 9 weeks, ending the 22nd of September on the proposed. So it's funny how when we lodged this, petition, there was no chance of a consultation paper, and then suddenly they're responding after they've done the. So anyway,
consultation period.
Exactly. It's just typical government shenanigans going on there, but
it is, and I mean that's going to be huge. That'll be huge. We want to know what's going to happen there, and the fact that they open up for consultation. I mean, maybe the next 12 months we'll see obviously hard legislation push through.
Look, Canberra doesn't resit until February. Then they've got 3 months until 30 June of sitting time. They're not going to get the the legislation through in the lower and the upper house in that time. If they do, it's a record. But to me, it's 1 July 2025 implementation date at the earliest. I give 1 July 2024 a 2% chance of happening. 1 July 2025 a 60 to 70% chance of happening. And 2026, 100%. She's in, she's locked, she's loaded.
Going to be interesting. Going to be very interesting. Other legislation, which I guess is really important for our clients, is that is related to their superannuation. Is first and foremost, are we going to get some indexation on the contribution caps? That's a really important one. We actually miss out on indexation, and all that means is for our listeners is right now you've got two types of contribution caps. You've got pre-tax concessional, 27,500. Or you can pull them through what's called a catch-up. Not going to jump into it. See another episode, previous listening. And then the other side is non-concessional, 110,000. We haven't received indexation on those for a little while. So I would say that after we end up through this year, we might get some updates on that around March, April, whether we are going to get some indexation. That's really important for strategy planning. And then the other one that's been introduced into Parliament, which everyone's a bit unsure of in terms of the mechanics, is this super tax on balances over 3 mil, which I think will mainly apply to self-managed super funds, which a lot of our expat clients shouldn't have. But that's been introduced. So it'd be very interesting to see what happens there, as well as some other pieces of legislation. But indexation, that's what I want to see in terms of what's going on with that one.
Definitely. And I guess, we'll keep everyone informed and updated, obviously through the normal channels, podcast, website, social media and that sort of stuff. So, and then we've always got the blind side, sort of piece of legislation that we don't see coming that, the governments are famous for releasing, whether it's state or federal. It's the old saying about, how do you know a politician's lying? His lips are moving. So when they say we're not going to make changes, to me, the risky one is going to be the budget next year. So if you think about it, when they did the budget this year, there was a promise. You elect us in 2022. Our policies will only be implementing what we promised in the budget, which is done. However, the next bit, next year, all bets are off. So the other one I think is definitely on the cards, whether it's this year, next year, or a couple of years' time, is the changing of the taxation of trusts. Labor hates trusts. So whether that happens, that's going to be another one. And big picture, whether they change a means test for the main residence exemption in terms of selling your PPR, they're going to cap it out. They're going to cap it out because you've got too many people buying a $50 million house in Point Piper, holding it for 6 months, flipping it.
Well, they cap it. They cap it in the US. So as a couple, 500,000 or 250,000 if you're owning it individually, and that's US dollars. But there's always concern. Yeah, you're right. Every time we're coming up to budget, there's always these talks that go around. They talk about stamp duty. Hey, any of the states can remove their stamp duty. They talk
states
about
are broke.
franking credits. That's always one that seems to get a lot of attention. The trusts and the ability to obviously distribute income, capital gains to different individuals. I know that the 50% CGT discount concession, that actually got a lot of airtime this calendar year at the start of the year. I know that would have been worrying for a lot of investors. The MRE, main residence exemption, I mean, obviously expats got given the forks by the government a little while ago on that one, but they might look at capping it. You'd think if they cap it, they could open it back up to Australian citizens that are non-residents. I think that would make sense. But that's obviously just conjecture at the moment. There could be a lot on next year with all those little updates.
And to me, I think it's going to be driven. I think Albo didn't read the temperature of the populace when he tried to do his referendum. People were struggling to make ends meet, and he's asking them to vote. You couldn't have got it worse. So whether next year is all about addressing the rising cost of living and rising cost of property. Conspiracy theory in there, do they cap negative gearing at 2 properties? So on your third, no more negative gearing. I don't know. There's all these sort of things that float around. So this is all conjecture, but it's conjecture where there's a bit of root of, concern from both the populace and the government as well at the same time.
I reckon he's pretty popular though, Albanese. I actually think he'll hold office for a little while, to be honest.
But if he panders to the populace, maybe
Yep.
will. I mean, the approval
Yeah.
ratings don't show that he's. I mean, when is it?
Overly popular.
Apart from, yeah, but apart from Johnny Howard, I've never seen a politician who is popular. But and I think you got to be short with worry eyebrows
I
to
was
make
going to
that work.
say, I mean, you can't miss those eyebrows when he's in a crowd.
Nah, exactly. It's like blinking your way through.
Yeah.
Um, so yeah, look, to me, the budget next year is going to be probably the biggest one, both for expats and also for residents in a long time. Because I think
Mm,
Canberra's realised, yes, they have been blessed with full employment, which means their tax receipts are good, commodity prices they're reasonable, so they're getting good, sort of returns from from the resource companies.
mm.
But they've got a truckload of debt, close to $1 trillion worth of debt. States, they make stupid decisions all the time. I know it's a political message, but I'm glad to see Anastasia Palaszczuk leaving Queensland. That was the worst thing for the state.
Yeah.
It's
I
her in
think
there, and
that's right. That's right. She, I can't remember the guy that's taking a position. Shit. How about that?
yeah,
Olivia.
he's obviously that good.
Yeah. But
Just
yeah, I
call him
mean
cheap,
she's held
old mate.
she's been in office for a little while now. So yeah, and I mean there's always a scandal that usually comes out. So I'll see if there's any scandal in the background there. But yeah, just resigning after tenure. I wonder whether um I wonder whether we'll see any interesting tax determinations or private rulings in the next 12 months, because those are always the things which I like reading. Like, I mean, we've seen some around discretionary trusts. That's a really good example. Non-residents using a discretionary trust and then distributing assets, and ordinarily the assets that they held were non-tap. So then they actually had to pay tax on them because they held it through an Australian tax vehicle. So I wonder if we'll see some more tax determinations or private rulings really drilling that home, or any other means.
Actually, a draft one that was released this week, which got me quite excited. I'm not sure if you saw it come out from the ATO, was the tax deductibility of financial advice. So they've released a
Yeah,
draft ruling, which is good. So it's
it's a
not
draft ruling
perfect.
though.
It's a
Don't
draft
get too
ruling.
excited.
So,
Yep.
but it's often the question that people ask us: Can I claim, tax deduction on the
Yeah,
work that we do? Which is ridiculous, because they should be able to. But anyway, they
that's
haven't
right.
been able
Yeah.
to. So
No,
at
no,
least
that's
it's a
right.
step in the right direction. I mean, the last time that legislation was updated was 1995.
Oh,
So
and the FPA, and now formerly, sorry, the FAR, the FAAA, I should say,
yeah,
they've been lobbying hard with the government to try and get that over the line. So FAA stands for Financial Advice Association Australia, but they've been lobbying pretty hard to try and get something over the line. And it's, I guess, to incentivize Australians actually seeking financial advice. So if that does get everyone, that's terrific. That's amazing. But again, it's draft legislation, so
yeah.
we'll just have to watch this
Keep everyone
space.
posted. Mate, I think we
All right.
wrap it up there.
Yep.
This will be our last live episode for 2023.
Mhm.
So to the folks out there, thank you for your earbuds. Thank you for your eyeballs. The podcast has been growing at a rate of knots, which is fantastic. And it's good to see that just not James's parents and my parents are the ones listening and watching. It's actually people, there's about 5 people instead of 2 that are listening to this, which is fantastic. So in the coming weeks, we're going to release just some of the top conversations we had through 2023, the
Mm.
key topics, the key points, just to keep that fresh in mind as you start 2024. You cross that threshold into the new year. Yeah, we just want you guys to kick goals and kick ass when it comes to
Yep.
managing your affairs overseas. So Merry Christmas from everyone here in Dubai.
Merry Christmas from everyone here in Australia on the beautiful Gold Coast.
And we'll talk to you guys in the new year, and keep that feedback coming. Keep the ratings and reviews and the questions. We love them, and we look forward to sharing this with you guys in January next year.
Thanks, guys. Thanks for tuning in. See you in the new year. Thanks, Brett.
Take care, guys.